Okay. Yeah, no, I mean, we can discuss everything, Corey. Um, we can discuss everything. It was just requested, for a little bit of training, in depth training of candlesticks. Yeah, okay, it was you. All right, I wasn't sure. I was like, it was either you or Chris, one of the two. So, and I think that, yeah, I think, yeah, I know Chris asked it. I can't remember, but yeah, so I wanted to go over, obviously I wanted to go over candlestick training, just kind of stuff that you're not going to find on YouTube. Obviously that's why you're here, so you can get a little bit of that one-on-one of someone who has experience, if you will. So, but I'll still address that swing trading question. So we can even start with that. We can start with these few questions here. All right, so when looking at a swing and it's hit your target entry, what is the process for picking a strike expiration, knowing it might take time to get where you expect it to go? You mentioned a bit of insight into your AMD plan to have weeklies and longer dated expiration. But as we've seen, it could just chop for a week or more. Okay, so my process, I'm gonna tell you my process when it comes to swing trading. Okay, and obviously every scenario is different, but the first thing you have to understand is every stock goes through a cycle. Okay, it goes through a cycle, and that cycle, I'm just gonna show you real quick. That cycle is gonna be, I'm gonna use this because it's I'm gonna use this because it's already completed the whole cycle. So we're just gonna focus right here for now. So it goes through this cycle of accumulation, markup, distribution, okay, distribution, then markdown. Now, sometimes after the markdown, you get a redistribution. Sometimes after the initial markdown, you'll get another level of distribution and then a final markdown. Okay, but that didn't happen in this scenario, but just understand that sometimes there is another level of distribution that takes place after the initial drop. Okay, but in this case, it was mark down and then accumulate again, mark up. Okay, so when it comes to picking the strike, expiration, etc., right? So this goes back to our class that we did a few weeks ago of understanding where you are in the cycle, right? So you have to know where you are in the cycle in order to pick an appropriate strike, and then also building on our class before of trading a measured move, right? So if I'm going by the week, right? I'm going by the week on SPY, okay? At this time, right? So this move was a 25-point move. So, SPY has been moving, I don't know, what is this? You know what, we can just use this so I don't have to do math. So SPY was moving roughly like $19, $18 a week at that time, right? So understanding where you are in the cycle is the first step. The second step is, figuring out what the distance is that you're expected to travel in a week, right? So like at this time, we were averaging about $18 a week, right? So in terms of total movement, so at that point, it's like, all right, I can do two things. If I know that my move is about $18 a week, right? There's two ways that I can trade this. One, I can see this massive accumulation taking place here. 1, 2, 3. And I can wait for a break of structure. Let me just remove this. So I can wait for a break of structure here, like this, to take size and go for the move, right? Or I can wait for, we see the first bounce, I can wait for a retest and bounce like it did here, right? And I can take multiple entries on my swing, okay? So I see 1, I see 2, I see 3, I see 4, right? And then finally a break, again, another break of this structure pushing up higher, right? But over this time period, this was 1, 2, 3, 4, 5, 6 days until it finally made its move. So you can either wait for the break of structure, or you can take multiple entries in your zone with confirmation. So like, that's confirmation, this is confirmation, this is confirmation, this is confirmation, okay? So you can either scale in, right, and do it that way, which is one method I like, right? Or you can wait until it finally has a full break and hold, right? So remember how I always say to you when we're trading live, I'm always like, wait for it to break and hold. So like in this situation, right, you see it broke out, and as soon as it broke, it dipped right back under, and then it broke out again, and then it fell back under the next day. You see, so you can build your position in your zone with confirmation. That's my preferred method. I like taking trades in the zone if I can, if I'm on top of the stock that I'm trading, right? If I'm focusing on it, or if I come in late to the trade, let's say it's already made these moves like this. Now at this point, I don't have access to these deeper values, so then I would wait for that break of structure. So it depends on your style, but with that in mind, then, right? So here we're at the break of 395, and we get a 20-point move. Okay, so in terms of strike and expiration, let's say that this is over the course of a week, right? So if that's over the course of a week, me personally, I like to go a little bit deeper because I'm more open to risk. So it goes back to your style. So maybe when you're having the break of structure here, maybe you're taking a 400 strike, or maybe you're taking a 397 strike, depending on your risk tolerance, right? So, or maybe if you're open to more risk, you're looking at this right here where it failed, and you're like, okay, well, I got to break a structure here, and if this trend continues and breaks over this high, then that's going to engulf this original BFI footprint. So maybe I want to aim for like a 405, and then I'll go in the money when it does do that, right? If you're more open to risk. So it's going to depend on what your risk tolerance is in terms of strike selection, but also in terms of expiration. When I'm doing a swing, I typically like to give minimum 50%, if not double the amount of time in anticipation, just in case it does. Like, let's say I'm trying to build a swing, right? And I'm trying to make this move from, 385 back to 408, right? So which is a decent move. That's a 20-point move, right? So maybe I'm trying to do this move, and normally it takes like a week for it to do that. It just so happened to do it in a day that time. But normally in regular market conditions that we, observed, right? Normally at this time, it's at that point in the at that point in the trading quarter, if you will, it was taking about a week to do an 18-point move. So if it was taking a week to do an 18-point move, then maybe I'm taking 2 weeks of expiration or 2 weeks of time on my contract, and I'm building my position out in that zone. So in case it does chop around, like kind of like Netflix is doing right now, and I haven't built a position in it, but like, look, like Netflix has been chopping around up here for what? Like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 sessions, right? So it's been bouncing around up here for a long time. So I'm being patient. I still haven't built a position yet, but I'm waiting for this break of structure, right? So when that break of structure occurs, I'm probably going to take a pretty decent size. So, every situation is different, but I guess the biggest key is, one, understanding where you are in the cycle. That's the first step, right? So are you in an accumulation phase? Are you in a distribution phase? Are you in a markup phase? Are you in a markdown phase? So that's the first step, right? Where are you in the cycle? Me personally, when I'm building out, when I'm going to take a swing, I like to take my swings when it's in the distribution or the accumulation phase. That's where I like to take swings at. Okay? I don't typically take a swing once it's already started to move. If it's already started to move, I'm just going to day trade it. I'll just day trade the move until it runs out of steam like this and it starts chopping sideways. So, but then in terms of strike and expiration, right? Like, let's just example, right? Maybe you're on this trade and you see it bouncing off this 228 level, and that's like a key level. You're like, okay, well, it's ranging from 228 to 220. So each time it tags 228, maybe I'm going to take a 220 strike or even a 215 strike in anticipation of that break of structure to move down, and break that structure, and then that strike is going to go in the money and hopefully have a continuation back to base, right? Something like that could be a play. So hopefully that answered your question there, Corey. What does elevated? If not, feel free to ask more. I'm going to move on to the next question. J-Rock, what does elevated volume dump in PM say to you on Friday? What ticker are you referring to? You're talking about SPY, okay? All right. Let's look at SPY. All right. What do you, when you say PM, you mean after hours? Or, oh, pre-market, got you. Oh, sorry. Okay. All right. So go back to, what does the elevated volume dump in pre-market say to you on Friday? Well, one, it's not really an elevated volume because the volume was actually relatively low that triggered this move, or that caused this move right here. So it actually wasn't very high. It's just that there's not as many traders in the market during the pre-market. So something you have to understand, like just in general, and this just goes for all stocks. When the volume is low, it's really easy to push the price around because there's nothing pushing against you. So when you when somebody dumps, what is this? This is like it's like 200,000 shares, right? So 200,000 shares at like, what is that? 1 second. So 200,000 shares times 400. So somebody dumps like $80 million, but there's no one to. Someone sells off $80 million in shares but there's no one else to push against it. That's what causes that price to knife like that, because there's no one to push against it. So, but what does it say to me? All it says is that this is just a reaction to the economic data. That's all it was. It was just a reaction to the employment rate being up, and so because the employment rate was up, that means that they're going to continue to hike rates. So that's why it reacted that way. Even though that's like a good thing, you're like, oh, but like elevated employment should be good, right? But because the employment's up, that means that they're going to continue to hike the rate, the interest rate. The Fed is what I'm referring to. Chris is asking, so if it was down, would it do the opposite? Nah, probably not. It was probably going to do this regardless, either way, in either situation. Yeah, yeah, it was probably going to do this in either situation. Up or down, doesn't matter. Yeah, all right. The 1.43 million on the 15. Um, I mean, I only see like it's like 300K, it's 300, then another 150, and then another 100. It wasn't really that much. Yeah, yeah, it wasn't really that much. Yeah, I mean, it's going to be slightly elevated just because of the economic data, but I mean, like if you like look at, days before, it's like 250K. It's normal to see that amount of volume. It's a little bit elevated, like very small, but it's only elevated because of the economic print. Mm-mm. Maybe on the 1 hour or something. Yeah, I mean, even on the 1 hour, it's only showing 500K. Yeah, it's not elevated, man. It's relatively normal. Like, I mean, it's not anything intense, I should say. Yeah, like an elevated volume would be like something like this. But even this wasn't even that much. See, like this is a lot for the PPI print or CPI print. This is like 1.2, but that's a pretty decent amount. But yeah, that 200K, 300K, that's not anything out of the normal. Yeah, I think you're having a glitch or something. Something's not correct. Yeah. All right, I'm gonna go to the next question. Um, Din, I have a hard time quickly mentally processing what the candlesticks are saying in real time, especially when levels PMH, PMO, pre-market high, pre-market low, etc. has to be kept in mind as well. It's a lot of visual info coming at you at once to process. Experienced traders seem to do it effortlessly. Yeah, that's true. Yeah, as you become more experienced, you can do so effortlessly. Yeah, that's true. Okay. Uh, I think that like something that you could do, just Din, if you're having a hard time like processing the data, right? If you're having a hard time processing the data, best thing to do is like you can widen your time frame a smidge. So like right now I'm on the 1 hour, right? And on the 1 hour, and I say this to everyone too, like you guys, you got to get off. And we're gonna talk about this because we are gonna talk about candlesticks here in a minute. I'm just going through your questions here for now. But using a wider time frame, one, it's gonna clear things up for you. That's the first thing. And it's like, I'm sure, like, if you're looking at this right now, right? Like, if you look at this chart, right now on a 1 hour time frame, it's really easy to see like where they were buying and where they were selling, right? Like, you can see that like real clear, right? It's so easy to see it like this. So it's not as much data to process when you're looking at it in that, on a wider time frame, right? It becomes a lot easier. Like, you can look at this and say, oh, okay, like they want to sell here, like they were selling there, and then they bought again down here, right? So like, it's a lot less to process because you're not on these like little micro time frames. So that, I would say, that's like the first step, is just moving to a wider time frame. Like I've mentioned to you guys before, for day trading, I like to take my entries on the 5-minute chart. I like to take my entry on the 5-minute chart, and then for a continuation, I like to operate on the 15. So like on a 15-minute chart, like once I'm in the trade, then I'm pretty much on the 15-minute chart, and I'm waiting for these candles to get smaller and weaker, right? And I'll have the 5 and 15 next to each other, and like you can see, like, because you're on this 5-minute chart, right? Like, and we're gonna talk about candles. Like, you can see this first one right here, like right out the gate. Like, that's why I said in the morning, if you guys who are trading live with me, I was like, yo, sell your puts, go long. Because in the first 5 minutes, like, what does this candle tell you? Like, and now it's got to be in relation to the other ones, right? So this first candle right out the gate, like, and even on a micro time frame, you can see it's like really strong. But just look at this. Right in the first minute of the day, okay? In the first minute, what's happening? So let's just examine this. I'm going to dig into your question a little bit here, Din. Like, let's just look at this. In the first 60 seconds of the day, when I was telling you guys to cut your short and go long, because look at this. Like, yes, we have this big cliff drop here, and then we have a drop, a base, right? So remember, guys, there's always, like, what have I told you before? Markets move in only 4 ways, right? So it's either down, pause, down, pause, up, pause, up, or up, pause, down, right? So there's typically always a pause after every impulsive move, and every impulsive move always gets some sort of response. That response can come, like, if you have an impulsive move, it will either be followed with a pause, where it's hitting a cluster of orders like this. These are a bunch of buy orders sitting in here. So it hits that cluster, but and that's what causes that pause. And then the next leg down, that's because those orders all got filled, right? So in that pause, though, that's when you have to, be really careful, right? Now, we weren't trading the pre-market, but you have to have an understanding of what's happening, right? So it's like, all right, we had a big move, it paused, so I got down, pause, down, right? But then after that, long pause, right? So when it's just moving sideways, and this stock is range bound, right? Or SPY, this ETF is range bound at this time. So how am I reading this? Like, how am I observing this? One, I'm not disregarding this pause here. I am taking a note of it, because what was the price that originated the second impulsive move? Well, it was right here, right at the tip of that wick. That's the price that originated this next leg down, right? So I have only 3 levels at this point that I'm watching. I'm watching this base level. I'm watching this high, which is what I consider the pre-market high, because at that point it had based, okay? And then I also consider the origin of the last impulsive move on the chart. So let's look at let's just examine it, right? Let's just dig in. I'm on a 1 minute, I'm really tight time frame, but let's just examine what occurred. Within the first minute, we have a bullish engulfing candle. This candle closes above all of these candles here, all of them. This is like 30 candles, right? So in the first minute, it closes above it. In the second minute, it closes above it again. In the third minute, it has a almost full body bullish engulfing candle, and it closes above it again. This thing is running. It's going for a run. And then it gets to this origin level, right, where it meets it meets those same sell orders that originated here, okay? Those same sell orders that originated at that point, okay? At that same time, look, that's the response right there. That's why you're seeing this price pause again in this same space here, okay? That's why you're seeing that sideways movement, because it's trying to cut through those sell orders, okay? So, but then it does, right? It does, and let's look at what happened, right? So then it eventually does cut through, and we get a range break again to the upside. So we get two. We break this high where the origin was, and we break this level here as well. We break both. So that's primed for a continuation. Now, if I was looking at this on a 5-minute chart, right, this would be even more clear to me. So let's just examine it, like what happened here on Friday. Look how strong this candle is. So what's happening? I'm breaking 1, 2, 3, 4, 5, 6, 7, 8, 9 previous highs, and I'm not only am I breaking them, but I'm closing above it. So if this was going to turn around, it's most likely going to turn around right here, right? But within the first couple minutes, we already have a range break. So, and you have a very strong bullish engulfing candle on elevated volume. So, you know, like this screams to me like, hey, this might see a nice up move. And obviously, as soon as it moved, like as soon out the gate, like within the first minute, as soon as it broke this, I was like, cut your short, because it immediately broke to the upside. Now, obviously, if it had turned around and broke to the downside, then we would have gone short again, but it didn't, right? So, but then again, let's look at this continuation. Remember what I said in my zone video: the size, the shape, the speed at which it's traveling, and the distance traveled from the origin, right? Like that's what determines how strong the impulsive move is. All right, it runs up on this 5-minute chart, and it has a little pause here in this zone where it paused in the pre-market, right? So it has a little pause, and look, these almost look identical, right? So it has this little pause here, but eventually it breaks out, and look at the shape of these candles, right? But how do we know when to exit? Like, what's an exit candle? What would that look like? Well, it can look like a couple different things, but in this particular situation, all right, we have look how these candles are getting smaller as they go up. So they're getting weaker as they're climbing, right? So it's showing you that it's like once it gets through this, then it shoots, right? Because there's nothing else left to push against it, and that's what causes this second leg up, right? That's what causes that next movement, okay? Because there's nothing left to push against it because it's broken past this zone here, right? But then you see this at the top, and you see it getting weaker, and this is signaling to you that, hey, this is potentially running out of steam, because remember, you have this big cliff here, right? So you have this origin of where this price originated, which is up here at, what is this? This is 414.68. Now, obviously, some people may have looked to see it completely fill, but just observing the candles, right, you can see that their size is getting smaller as they're going up. So after this first range break, you get a strong one, and then a weaker one, and then a weaker one, and then a weaker one, and then a really weak one, right? And then what happens after that? You get a break of 1, 2, almost 3 previous lows. So this one candle is breaking 2 previous lows and closing beneath 2. If you didn't exit here, this is where you would exit, right, on that next one, because it's showing you that it's breaking beneath them, right? And so then the question is what is this wick doing? Is this wick reaching, or is it rejecting, right? Is this gonna bounce here? Is this gonna bounce here, or is this reaching to go lower, right? That's the next question. We had gone short somewhere in this range, somewhere here. We went short because of the way that the price was responding. And excuse me, when you're looking at this on a 15 chart, this is why I like to use them side by side, So I use them side by side, and look how these candles are closing, right? So you're getting 1, 2, 3, right? Fading away with pretty much no response. You're getting 45 minutes of selling pressure after a really strong impulsive move. Most likely, this is about to make another move down, which is why we took that short and we caught the long and the short side. We caught both. So, and that's because you still have all these sell orders here that are pushing it down, right? So, and then again, same thing on the reverse side, right? You have this range break here where these buy orders were, right? And so that's showing you that same almost, it's like almost 2 repeat price actions of the day, right? You have 1, you have 2, and then you have 3, and they're pretty much almost at the same spots. You know, like where this failed it's failing again. Where this bounced, it's bouncing again, right? So, you know, it's not only just reading the candles, but how they relate to what came before it, right? Like that's like the biggest thing. Like what occurred? What was the last thing that occurred at this price? Like that's the question you have to be asking yourself like constantly. Every time anytime you're on a chart, right? Doesn't matter where you are. What was the last thing that happened when it was at this price? How strong is this candle? It's very strong. It's one of the strongest candles you can get, right? It's extremely strong. So it's not it shouldn't come as a surprise that this is making a bounce here, right? Like it shouldn't be. It shouldn't be a major surprise. Because look at what happened before. Look at how strong these orders are. So I'm gonna just scroll down a little bit. Okay, I'm just gonna pause just for a second because I was just talking for like 15 minutes solid. But yeah, that's that's another thing that's gonna help you though, Din, and for everyone else who's listening is just moving to a slightly wider time frame. I know that some of you may trade on the you like to trade on the 1 and the 2 and the 3, and I think that those time frames personally are just anxiety because one, it doesn't tell you anything. It doesn't tell you enough. That's what it is. It doesn't tell you enough because like when you're looking at this, right? Like yeah, you can see this move like this, but it doesn't tell you enough in terms of like in terms of size and shape and where the strength is, because it's like, oh yeah, well it had like 4 candles up and then it showed a rejection candle right here, so maybe I'm gonna exit my trade and it's gonna reject. But like if you were trading on the 5 minute, right, and you were looking at that exact same chart, right, it doesn't show a rejection. It shows continuation. It shows a pause here, right? So you're expecting that pause, and maybe it's gonna fail, possibly. But that's like why I always say for you, wait for it to close. I'm sure you guys have probably heard me say that maybe, I don't know, 1,000 times in the week, right? I'm like, let the candle close, let it close, let it close. And that's because, like, when this candle opened, right, it's showing a rejection, and that's because, like, this would have been full body, right, when this almost full body, right? But when it closed into strength. It closed back up. And then look what followed it. You see what I'm saying? So that's why I like to let them close, and that's a big key there. It's just moving to a wider time frame and letting candles close and just paying attention to where the origins of these impulsive moves occur. I mean, that, like, if there was like 3 things that you could do, just pay attention to the origin of where the impulsive moves occur, and then let candles close on a wider time frame. If you're working, like what I like to do, I'm gonna just show you like how it looks for me. I'm gonna just screenshot this and I'm gonna put it in the chat so you guys can just see, like, when I'm trading, when I'm trading, this is what it looks like for me. I'm gonna post this in the chat here. So I'll have both next to each other like this, okay? I'll have both charts going simultaneously. I'm just going to put it on SPY because we're working with SPY. I have SPX up. So I'm just going to show you like how it looks for me. and why it's a little more clear, I guess you could say, when I'm trading, because when I'm looking at this, I get to compare the two simultaneously, and I'll look at them and I'll say, okay, this looks like a good entry, and then as it gets weaker or stronger, etc., it's good to have the 2 time frames and nothing more than that. You don't need anything more than that. Like that's plenty, especially if you're day trading. So like that's how it will look for me when I'm day trading. And it's you can get a much clearer picture. But if you try to do that with a 1 minute time frame, it's chaos. And in that same breath, I also want to say, when I'm looking to swing trade, it's the same thing, but a slightly adjusted time frame. So I'll look at it like this. Like I'll have my 15 chart up, and then I'll be looking at the 4 hour. Let me just and having I call it a pair. So having that pair next to each other. Let me just adjust this really quickly, right? So having that pair going, I already know where the zones are roughly, so it's like about right there. So like when I'm looking at this on like a 15 time frame and a 4 hour side by side, I can see a nice clear picture. So when I'm looking to enter a swing, it'll look like this for me. I'll have the 4 and the 15, and I'll look for these movements and for a 15-minute candle to close in my zone, right? So it'll look like this. It'll look like this for me. So I'll just have my zone up there, and as those candles close in that zone, that's when I'm, that's when I'm, making my move, taking my entries, etc. So it just moves to a little bit wider time frame is all. I'm just gonna pause just for a second, just let you guys kind of digest that, and then we can dig into the next topic. Or if you have any questions, feel free to fire them off. I like to take pauses in between every 15 minutes or so. I have some more stuff that I want to discuss with you guys on candles as well, in terms of just like a typical look of what you're looking for. There's really only two types of candles that I like, that are my when I'm looking for a confirmation of a move in a direction. There's really only two shapes, if you will, that I look for, and I'll show you. I can show you them all on this one chart. And the biggest key is also looking for these on the right time frame. All right, no, oh, maybe one question. Go for it, Chris. Yeah, for day trading, the 5 and the 15 are paired together. For swing trading, the 15 and the 4 hour are paired together. One ticker, 2 charts, 2 time frames. That's it, nothing else. That's all you need. 5, 15, 15, 4. You don't need anything else besides that. Anything outside of that is just it can mess with you. That's all I'm gonna say. It doesn't give a clear enough picture for the goal that you're trying to accomplish. That's right. Yeah. It's not a clear enough picture when it's too small. Yep. All right. I see you're still typing. Yeah, in my book, like when I saw this guy right here, I was already like, looks like it's time to leave. Okay, and then sure enough, that's what. Why? Because it's like I explained earlier, it's closing. They're getting weaker as it's trading up. So once it finally breaks the zone, which was right here, breaks the micro zone, it shoots. But then look how these candles get weaker as it goes up. They keep getting weaker and weaker until it eventually reverses. That's why. Yeah, whenever you see a doji at the top of a chart, yeah, the body is smaller. Yeah, the body is smaller. Yeah, sorry. Yeah, you're looking at the body of the candle. Yeah. Yeah, the body. The body is smaller. Yeah. Yeah, the body is key. Yeah, in terms of strength. Yeah. So you can see how this is just getting weaker and weaker. Like, if you were to measure these sizes out, right? You can see how it's getting weaker and weaker, and this trend is starting to bend, right? So, it's like that old saying, it's like the trend is your friend until it bends, right? Well, that's what it's doing. So you need to pay attention to that. All right. So two candles. There's two things you need to look for. All right. It doesn't matter what you're trading. There's two candles that you need to look for that will signal or to give you the confirmation. Okay. There's two, and they can vary in shape, but what you're looking for, right, in terms of strength. Let me make this like that. All right, what you're looking for on any chart, if you're trying to short something, you're looking for these guys right here. Right here, 1, 2. That's what you're looking for. This right here, this is the first clue to a bigger move. You're looking for two candles closing just like this, breaking previous lows, breaking and closing underneath previous lows. That's the first clue. Okay? Then on the bull side, right? On the bull side, you're looking for these two guys right here. Like this. That's what you're looking for. You're looking for these guys. This is the strongest setup, if you will. Two like this and two like that. And you can see what happened after that as well. It's very clear. You can see what happened. Even if you weren't paying attention to like origins or anything like that, and you wanted to wait for all the confirmation in the world, man, after it's made a big move, it's already made a tweezer bottom right there. After it made a big move, and it's having this continuation up. When you see these guys right here, this is a stronger, strength. Yeah, these two right here. This was my first clue. We had already got kicked out, and you guys remember I was like, wait, just give it some time. But that's why we closed that long. I saw this and I was like, suspect. Then it started fading and it broke the previous low. I was like, I'm out. And then we just waited and it moved sideways for a while, right? But then when I saw this wick down like this, I think that's when we went short actually, about right here. Because I know we didn't catch the whole move, but we did catch the waterfall. So but when I saw this wick, that was enough for me to put me in the trade, if you will, because I was already looking for a short side move because of this. So contextually, it made sense to take the short side. Also, from a probability perspective, we're at the top of a chart. Taking the short at the top of a chart is always a high probability trade in general. But just from a candle perspective, these two guys right here, like I guess I should say, the better view is actually not only these two guys, but following this one. So I have the weakest bullish candle you can print. It doesn't get much weaker than that. It's just a flat doji, and then it's followed with two bearish candles. Like that right there just screams short me. Like even if you didn't have this, even if you didn't have this happening on the other side of the chart, this is exhaustion. That's what that is. And I mean, this same look shows up on many charts. Like you're gonna see this happen over and over and over and over again. Like it's the same kind of look, you know. You have these bullish candles, right? And they're strong, but then they start getting weaker at the top. And then look, 1, 2, 3, 4, right? They try again, and then look what it's met with. Close below, this closed below previous, or this broke below previous low. This closed below previous low. This closed below two previous lows. This is a reaching candle here, you know? So, like, you have to compare these lows and where you are on the chart, right? So it's high probability that at this price, right, how these candles, these red ones, relate to this price, it's high probability that it's probably going to have another down move. That's how we caught that short on AMD as well, because look what's happening. This was the origin that triggered this impulsive move, and then I'm getting 1, 2, 3, 4, 20 minutes of selling, and then again, even if you didn't take that, all right, you get a retest, and then look what it's met with, the same energy, and then a breaking and closing to a new previous low. So you already had like 1, 2, 3, 4, 5, 6 confirmations to take a short move from here. Even if you only caught, this portion of it, right? Just that. Okay, that's a good trade. That's good, right? But then how does that candle relate to these other ones, right? Well, in the same reverse, the reverse idea, right? Look at this wick. This wick is what created this wick right here? What created this wick? Why did this wick print like this? Okay, that's the question you have to ask. Well, I'm going to answer it for you, and then later you guys will be able to, I'll quiz you on it. But the reason this wick printed is because when that price fell from here, there was a cluster of buy orders here in this section. There was a cluster of buy orders. So again, how these candles relate to this, right, to this wick, look what happened. Look. And it's showing you. It's like, hey, I might bounce here. I think I want to bounce. And then it comes down and it touches, look, the tip of this wick. And look what happens again. It bounces, right? So then possibly you're looking for the same move. And you're looking for this break of structure, which occurred here, like this, right? So maybe you're looking for another repeat. So I'm not even looking at the right of the chart, but let's look at what happened. If I move that to the right, where that origin of this impulsive move occurred, the origin. So that's the origin, and then look at these guys. What did I just tell you a few minutes ago? What are we looking for? We're looking for these two. These are our wet bandits right here. That's who we're looking for, right? Like, we're looking for these guys for a bullish move, and then look what happens. So you have a break of structure, a bounce off of a previous origin where we had an impulsive move, and then you have a continuation back to the same spot where this origin, triggered this short side move, and then you have another repeat price action, same thing. So you get this same repeat price action, and it falls all the way, to here, right? So, all right. So then at the same, in the same breath, right? On the bearish side of things, you have this impulsive move to the upside, right? But then look what happens at the top. You get these two guys right here. These two. So these guys are very interesting for us because that's just the bearish look that's what we're looking for. Okay? We're looking for this all the time. That's always what we're looking for. We're looking for, these two and these two. That's what we're looking for. So where did the break of structure occur last time, right? So that break of structure was like about right there, okay? So we're looking for a break and close underneath that same spot, right? That's what we're looking for. We're looking because it wicked off, and then and it had a bullish candle here. So we're looking for a break and close. Well, this guy, that's what it does. It breaks and closes just underneath, and it wicks down. And then look what happens after that. And we get this same short side move. I actually caught a part of this short into the close on Friday. I had this AMD 103. You guys may have heard me talking about it. But that's why I was taking that same short. Above, forget patterns, forget everything else, just looking at candlesticks, right? And just reading it, reading the candlestick for what it is, okay? It's whenever I see these two or these two, my alarm bells in my brain just start going off. If there's anything that you're looking for on a chart, that's what you're looking for. And it doesn't matter what the time frame is. Like in terms of I'm excluding micro time frames, but like if you're on a 5, if you're on a 15, let's go back and look at this. Like, look at this. Even on 15, it's even more clear, right? It's super clear. 1, 2, and you still get a downside. Even if you waited 30 minutes every single time on this, even if you waited 30 minutes for both of these 15-minute candles to close out, you still would have caught a nice trade. You would have got half of the move each time. Like, there's nothing wrong with getting a, what is this? 102 to 103.60, $1.50 move. If you caught a $1.50 move every direction on Friday, you would have made a grip of money. Like, we caught the long, the short, and I caught one more short because I didn't want to go long. So, but just like again, using those two time frames, it's super, super clear, and that's what you're looking for. You're looking for these two guys right here. You're looking for these two like this, these two. That's what you're looking for. And that's why you can't trade on these little micro time frames, because it doesn't tell you anything. It's chaos. You can't read these candles, not effectively. Not effectively, because it's too... Why did the last set on AMD not move up? What do you mean? From where? Where are you talking about? Around 1900? Over here? In after hours? Oh, 1600. Here? The end of the day? You're asking me why it didn't move up? Is that what you're referring to? Yeah, it's end of the day. Yeah. But you do notice, though, one thing, though, Corey? Look where it based. Right at the edge of that wick. Look where that price based at. Right at that edge. Potentially, yes. Yeah, potentially. Yeah, do they signal a reversal? Yeah, potentially. So, a classic setup that you're going to see 10,000 times in this market is it's called this. It's called drop base rally. Okay? So drop base rally, drop base rally, drop base, but the day ended. You're going to see that a million times. I'm going to just jump over to SPY because it was like a really nice one and we caught and we traded it. So when I was looking at this in the pre-market, right, I've seen this pattern a million times. So big drop, base, rally. I'm going to give it another extreme example of this. Just because it's coming to mind right now after a big move. This one right here, where Ukraine war broke out. So drop, base, rally. Caught this one. This is a nice move. Drop, base, rally. You're going to see that a million times. Drop, base, rally. You're going to see it over and over and over again. Drop, base, rally. Like, you should just train your brain to look for that one. Even intraday, drop, base, rally. You're gonna see that a lot, a lot. So, very common move, drop, base, rally, especially in a bear market. Okay, next question. So I didn't catch that was the end of the day, which is why I was wondering why it was flat. And near the end of the drop rally, the candles get weaker. That's right. So you're looking for that weakness. Yeah. When you see those candles start getting small in terms of body like that, that's typically when a trend is ending. Or you get like something like this where it's like a sudden price movement against you. Like there's no pause. It's just like it hits a price and then they just slam it with orders, right? So you got like what, 1.1 million volume. So elevated volume at the top or the bottom of a chart typically signals a reversal as well. And put that one in your notes. Elevated volume at the top or the bottom of a chart typically signals a reversal that's about to occur. Look at what happened here. Look at the volume. So 600,000, 900,000, 800,000, 900,000, 1 million on this guy right here. Okay? And then a drop in volume, 700,000. All right? That guy right there already gave you another signal that potentially you're going to have a reversal occur soon as well. Same thing over here, right? Let's look at this. You have 300,000, 300,000, 500,000, 400,000, 600,000, 600,000, 600, 600, 670, and then 1.2, and then 870, and then 1.1. These three guys right here were telling you that, hey, maybe this trend is about to end because of the elevated volume as it elevates towards the bottom of the chart. So it's not always, but often. Not always, but often. You can see it again here too, right? You can see this volume, right? So you got 200K, 200K, look, a lot of times price makes a big move on low volume, okay? What's this? This is 275, 500, 276, 400, 500, 700, okay? But look, you get 400 and then you get a 730 over here. And you get a 590, 280, 260, and then you get a 760 here at the top of that chart. Okay, so it's higher than these previous values, and then look what happens. You know, so whenever there's a move occurring, even if you miss the move, it's what you're looking for. You're looking for a ramp up in that volume, and then price action to support it. That's why I say that the volume is so important. It's not always, but often. Not always, but often. So that's a trading edge, right? It's not going to happen every time, but more often than not, when there is an elevated volume at the bottom of a chart where a impulsive move originated, that's typically where that trend is about to end. So you can put that in your notes. More often than not, when there is elevated volume at the origin of where an impulsive move originated, the price point, where it originated, that is typically when a trend is about to end. And then you're going to look for the price action to support that idea. If you were looking at this on a 15 time frame, it would have been nice and clear as well. You know, where that's going. It's just a repeat price action of this same move. You know, because that's all a trading edge is. A trading edge is simply this thing is more likely to occur than this other thing. That's all it is. That's it. Based on what I'm seeing, there is a higher probability of this occurring than that occurring. You know, there is a higher probability of this chart continuing to trade down after printing these 3 candles than it is for it to continue to go up, based on the origin of the last impulsive move that occurred at this price level. That's all an edge is. And I'll say one other thing, that I gave you the 2 that you're always looking for, okay? There's 2 candles you're always looking for. I showed you what weakness looks like, what strength looks like, and how candles relate to each other. There's 2 other types of candles that I'm always looking for, and those are dojis. Whenever I'm getting especially multiple dojis, one after another, whenever I see a doji after a big move, that is just a red flag for me. Or a hammer, like this guy. Like if we get to the top of the chart and then this prints right here, my alarm bells are just going off when I see this. Okay, so these 2, doji, hammer, those 2, I'm always looking for those 2 as well, on top of what we've already discussed. Those are the most important to look for. So I'll just, highlight those as well. Let me just highlight all 3 of these. So these 2 guys like that. You're always looking for those guys, and you're always looking for a hammer like this, or to the upside, either one. If you get a hammer at the top, that's how I caught that short on Tesla this week. I'll just show you something. Speaking of candles and how I caught this short. Remember what I said just a minute ago about exhaustion at the top of a chart? All right. We see Tesla over here, right? And I've been watching Tesla because I've been playing it both directions. I've been having a good time with it, okay? But when you go to the daily on Tesla, I see this hammer like this. Let me just delete this all. I see this hammer here at the top of the chart. And this just grabs my attention big time. That's also how I caught this short with Din, I think, was trading with me. When I saw this guy print here at the top of the chart like that, that's what made me take that short under 810. Okay? Because I saw this after that big impulsive move. And then I saw this after this big impulsive move. Okay? The shape of this hammer was screaming to me, shorten. That's why I played Tesla on Friday to the short side. Yeah, it can be either way. Yeah, it can be either way. But where it prints, the size of it, the color of the hammer is also important as well, and which way it's facing. Okay, so like in this situation, right? Remember, it's all context. So if I'm coming from the bottom of a chart, right? If I'm coming from the bottom, recent bottom, like this hammer right here, what's this hammer doing? Is this reaching or is it rejecting? Well, it's reaching because I'm coming from a base, right? But if this same hammer right here printed at the top of a chart, it's going to give it an entirely different meaning. Like if this hammer prints up here, right? It's a rejection hammer. That's how I'm going to read that, because it's printing at the top instead of the bottom. So this goes back to the very beginning of this lesson of understanding where you are in the cycle, right? I understood that we had already accumulated a large position and we've gone on a 300-point rally and it's time to distribute. So when this hammer printed like this at the top, it was screaming at me to short it. And that's why we caught that short on Friday, that big move. What's this? This was a 61-point move on Tesla. That's why we caught that. Because I'd already saw it 4 days ago. Before it even occurred, I saw it coming. I was just waiting for the right time to strike. That's all. Actually, I even posted that one, not only in our group, but I actually posted that one on Twitter because it was a high conviction trade. Yeah, when I saw this in pre-market, right, and my personal level, I was looking at the 900 to 890 range. I think I had posted on Twitter 890, but this is how we caught this, though. So I was waiting for this break of this structure here, like this. I was waiting for that break, but again, size, shape of candles, I took the entry on the retest because it had already failed once, and then it failed again. So then once it broke low, that's when I doubled down. Hammers, again, see this? Here's a green hammer. It's printing at, look at, like if we were just looking at the day, right? If we were looking at the day, this hammer is printing green at the top of the chart. But contextually, overall, it's in a downtrend and the macro is at the top of the chart. So it's not reaching, it's rejecting, because it's already the order flow is already down for the day. So yeah, these were my two levels that I was watching, and it just cut through it like butter. I almost held this all the way to the bell. I got out like somewhere like right here where it started to bounce. But yeah, that's how I caught that though, because of the shape of the candle. This right here gave me the signal. Just look what happened. It shot up and then it just got slammed. And then it based. So here we go again, right? Here we go again. Drop, base, rally, right? It's a longer time frame. retest the same high, fail again, break of structure, continuation. That's why I got that, because that's what was going on in my head. I'm just giving you what was happening in my mind. I saw this and it grabbed my attention. I said, okay, I saw the base. All right, I saw the bounce the next day. I was like, all right, I'm just gonna wait. I'm just gonna wait for either the structure to break or a retest. Came up, retested. I wasn't convinced fully. I should have taken the retest, but that's okay. I just took it here instead. So I started the position there, added more, and then ran it down. But that's only the reason I got that is, again, contextually I understood what was happening because of the shape of the candles, where they're printing, and what type of candles they are. So let's go to 4 hour, right? Like, look at this. This guy was screaming at me, screaming to short it. But I wanted to wait for the break of structure because of how strong this rally was. I knew that there might be some more orders still sitting there, and there wasn't necessarily any catalyst to cause it to trade down. But like in my mind, I'm like thinking like a BFI, right? Or I'm trying to, at least. I'm doing my best, and I'm like, elevated volume at the top of a chart. All right, like let's look at the volume. All right, let's look on a bigger time frame. Look at this volume here. Look at what's happening. We have 21 million, 22 million, 29, 28, 31, 40. 40 mil. That's elevated. That's definitely elevated. Okay? So 40 mil. And then it drops off. Just like we saw on our micro time frame a few minutes ago. We get elevated volume, and then the volume drops off. 31, 26, 24, light volume, and then what happens here? 37. See what I'm saying? So it's this was a clue here. This guy right here is a big clue, because I was looking at this volume elevate as it approached, where potentially there might be a high, right? So I was just waiting. Obviously, I also had a key level, so it's like multiple confirmations, right? So I had this over here as well, the origin of where this impulsive move started, which was here, and it came up right to the base and rejected hard. I'm like, came up again, rejected hard. I'm like, oh, interesting. Next day, hard continuation, right? But like just looking at the candle though, this one candle alone just told me, like, it basically told me everything I needed to know. And at that point, it just became a waiting game. Once I saw that, that's what gave me the short on Friday. I knew that this was going to occur days in advance. When it was going to occur, I don't know. But by using my zone and by using my understanding of the shape of those candles and the break of the structure, that's what gave me the play. Because look at the shape of these guys. Look at the shape of these candles here. Here's that same hammer rejecting at the top. Then what does it get followed with, right? So what's following that hammer? So remember, when we go back to the beginning of or like the middle of our lesson, what are we looking for when it comes to a bearish move? Well, we're looking for these two guys right here. Well, they already printed in the pre-market too. So I got 3. I got 3 there. I got 4 here, right? So I'm already, and I'm getting another rejection from the same price level, right? From this same price level from days before. And it failed the day before that, and it failed again in the pre-market. All right, so that's interesting. So it's like I have my first clue came in 4 days ago here, right, with no recovery. So look at what, in terms of candles, right? If we were looking at this from candle shape, look what happened here, okay? This one candle, right, took this price from here to here in terms of strength. Then it took 3 candles to get back up here again. So this one was way stronger than these other 3. So who's in control? The sellers. The sellers are in control. So that's again why it was screaming at me. So I have a hammer at the top of it. Let's put this in our notes, right? I got a hammer at the top of a chart, closing red. Right? I have it rejecting right at the base of a key zone of my zone here, like literally almost to the penny, right? So I have this rejection in my zone. So that's one confirmation, two confirmation, right? Or two things of interest. Then I have elevated volume. Volume ramping up into that high price. Okay, three confirmation, right? Then let's go back and let's look at a little tighter time frame. Let's look at the 4 hour. All right, this guy was really strong, and then it created a base. All right, it created this base. It created the base here, where that sell stack got weak, and these candles started reversing. Okay, so that's a price point for me. All right, so let's go here. All right, I said 890. So 890, and then I want to look at 900 as well. Why 900? Because 900 was the base of this impulsive move, this last big BFI origin, okay? So the reversal levels, we have a small guy here and a small guy here, right? So this area is screaming at me. So this is my point of interest, okay? So then what happens, right? So then the next day, you get this drop base rally. Like I said, there wasn't really anything negative in terms of Tesla for it to trade down. This is just, again, thinking like a BFI. But I'm observing what has happened and how strong it was. It spent a whole day in the red. It didn't do anything. It gave up everything. And there was no response to this for an entire day, right? Nothing. There was no pop, nothing. Just all selling for the whole day. So that is like yelling at me. It's completely opposite of everything that we've seen for like 3 weeks straight, right? Something like that, like 3 weeks. So that's also how I caught this one too, right? It's the same. I'm doing the same thing over and over again. So Din traded this one with me. So I saw this move, and then I saw this same thing. It popped, and then look at this. Look what happened, right? There was no response, no reply. I said, interesting. 810 base. Tesla breaks 810, I'm shorting it. That's it. Simple as that. And then I caught this move here. We caught this move like that. And that's because I understood, because of the shape of the candle, it was screaming at me to short it. But I was willing to wait for the break of the structure that time, right? And we caught this move. So that was nice. All right? But the candle shape showed me everything I needed to know. Or not everything I needed to know, but it gave me the clue, right? Like, look at the strength of these candles. So you have this big bullish one, and then it's weak leading up. You have an impulsive move from the earnings. Okay, interesting. But again, look at the volume. Look how the volume is elevating as it's getting close to the top. And it elevates, and then the next day it's weak, and that's why it's cutting through, because there's no more buyers at that point in time to push that price higher. And it's breaking the structure and breaking the base. Then we get a little more news and we get a reversal, right? So we're moving with the rest of the market. But then this guy here is what gives me the first clue. So I have a hammer followed with a doji. The whole day just closes out red. But the shape of those candles is what gave me the clue. Next thing, when we go to this short side move, retest, right? Reject, and then another one. Even if you were working on a 4-hour time frame, look how this looks. Remember what we're looking for, right? We're looking for these two guys. That's who we're looking for. Like, when we're looking for a bearish move, that's what we're looking for right there. And you're getting 8 hours of selling. Like, it doesn't get better than that. You're getting 8 hours and then another 8, followed that. And you know what? This is most likely going to continue. Most likely. There will probably be a small bounce on this, but because of this shape here, like, if I see a small bounce back up, if for whatever reason, by the grace of God, that this runs back up here again, I'm 100% going to short it from this level again. Unless there's some crazy catalyst that's going to push it beyond that. But based on the shape of these guys, I'm now waiting for the continuation. So from here, it's like I'm going to wait for the break of this low here, right? So I'll wait for the break of the low for that continuation. And then I'll be mindful at the base of this origin, right? Because these two guys are important to me for the same reason, right? Because what do these guys signify to us? This is a bullish move. When they get that follow through like that, 1, 2, that's what we're looking for. So if there's going to be a bounce, it's most likely going to occur right there. Like right at like, what is that? It's like 842, right? So that's what I'll look for. Maybe we touch down and we get a bounce from there. Maybe it runs back up to this 890, 900 zone and I can get a short from there at that point, right? So, but again, you know, size, shape, distance traveled, and volume associated with it. You know, these two guys grab my attention because they're so strong. Now, when it does break that, then I'll look for that nice continuation to the next level, right? Of where the origin of the previous impulsive move originated, which is here, right? Because we can see that by the shape of these candles, right? So let me just clear this up a little bit. Get rid of this, you know? So it's like, it's all like an if-then scenario, right? But like that. So that's going to be 7, like 7, you could say 780 roughly, right? Give or take. You could say 780, right? And that'll be a key level because that brings us back to that supply, because that 780 has been, that 780 has led to some nasty selling over the last few months. So if and when that breaks that, we can anticipate a move like this. Again, most likely. We're most likely going to see another move like that, you know, from that break of that key level there, because it's been selling off, you know, intensely. So I'm just going to pause on that. But yeah, you know, using these again for like swing trading, right? Remember what I said about like 4 hour 15. When you see this show up on your 4 hour chart, this grabs your attention. Now I used it for a day trade, but I could have used it for a swing trade too. Either one, right? I could have used this same level and started building a position here, right? I could have took an entry at the retest of that, right? We could have taken an entry there. We could have taken an entry at the break of the 900 level, and then another entry maybe at the break of the 890 level when it finally breaks the structure, right? So you could have did 1, 2, 3 like that, right? Now Tesla's a high beta, so it moves faster. So, you know, some like on certain stocks you have to react a little quicker. So you have to, you know, recognize what you're trading and, you know, pick tickers that suit your personality, right? So like Tesla and AMD, you gotta go, you know. But like if you're trading like, I don't know, like Ford or you know, Walmart or something like that, you know, like low beta, medium beta, you can move slower, right? And you get more time to think about and analyze these candles as they develop. So, but yeah, it's always about how the candles relate to what occurred before. So size, shape, distance traveled, volume associated with it. So this kind of gives you a little bit deeper look and builds on top of our zone videos. Okay, a little bit more detailed look of what you're really looking for. But yeah, 5:15, you know, 5 minute, 15 minute for day trading, because you're looking for these guys right here. You know, you're looking for that right there. 1, 2, 1, 2, like this. Right? That's what's giving you the signal of a potentially a bigger move, right? And then where they print is the biggest key, right? So you can kind of see, go back to the exhaustion, right? You get this big bullish move, but then look what happens at the top, right? Look how weak these are. And look at this wick off like this, right? From a key zone. So this, if you were long, is also telling you to, hey, it's probably time to potentially get out of this trade, right? Because it's at a supply zone. You shouldn't even be taking long positions here at the top of a chart because it's low probability. especially on something like this that's had a 300-point run. You know, like that's a long ways to run. So wouldn't be surprised if it continues. I'm just going to pause on that note, see if you guys have any questions. Speaking of which, on that same note, actually, on drop base rally, look what Walmart has done here. And we traded this in Wavy and Corey and Arju traded this one with me last week. So we got this nice break of structure. We wrote it down. We held it for the day. But look, it dropped and then it wicked off and it formed a base. All right, so that's interesting. So on Monday, which is why we closed our short position, because I'm anticipating a potential small rally. Not a big one, but potentially a small one. I could see this rallying back up maybe to like 130 or something like that. And if and when it does, if it bends here in this range, I'll look to take another short for the week. But this is setting up a classic move here. Drop, base, and it already showed me now for 2 sessions in a row that it's forming a base here. Now, it's not to say that it won't have a continuation, but there is a high probability that this will bounce based on what I'm seeing. And that's because of the shape of these candles, right? So like if you were looking at this on like a 4-hour time frame, all right, look how strong these are, but then look at this, what's happening here. So this view, right? This look, like this is the same thing you're seeing on SPY from last week, right? Or from Friday, right? Same thing. Like it's the same look. So you're getting a big move and then you're getting this sideways movement. It's the same thing. So you just have to contextually get it, have that understanding, and then look what happened here at this 125.63 level. You had a pretty strong move. Yeah, it was met with more sell orders, but it was still a strong move. Then look, the next day had a little bounce, came back to it, bounced again, came back to it, bounced again, fell through it, but not long, drop, base, and it rallied. We got out like somewhere here or whatever it was. So, but the point is this looks like an accumulation. Someone has decided, or multiple people have decided that this is a good price to accumulate Walmart. So they're trying to accumulate to get a push out of it. They're trying to get a push and break out over this price level. They're trying to push past the, let's just call it 127. They're trying to push past 127, and they're trying to take this back up. Yeah, exactly. The steam has run out. When the steam is running out, it's time to leave. That's it. It's time to leave. You gotta be, that's another thing to just add to your notes, okay? Whenever you're involved, it doesn't matter if it's on a macro time frame or micro time frame, does not matter. Whenever you're involved in a move like this, an impulsive move, you want to sell into that strength, okay? Because what happens is, again, you're going to run into a cluster of orders, okay? You are going to, like not maybe, you will. You're going to run into a cluster of orders. And when you do run into the cluster of orders, you're going to get a retrace. So it's better to sell it into the strength and then let the strength of that retrace get weak, like you see here, where it weakens, and then you get a bearish candle breaking 1, 2, 3, 4, 5, 6, 7 previous lows and closing full body to maybe take an entry here again for another leg down, right? Especially when it breaks a structure here at the base, right? So you could maybe take an entry there, and then maybe take another entry here, and you could have collected on that move, right? But the point is, what I was digging into more so, is when you're involved in these impulsive moves, you want to sell them into that strength because you're going to run into that cluster of orders. You will. You know, it's no different than like SPY, right? Where we took our profits and went the other direction because you have an impulsive move and then it runs into a cluster of orders and we take a sell and we look for the next impulsive move, and then impulsive move occurs and it runs into another cluster of orders and then it reverses. So the point is when you sell into that strength, the difference of selling your option contract here versus selling it here are two completely different prices, especially if you're trading a short expiration. As you all know, even though you're selling at the same underlying price here, let's just say 410.48. 410.48 on this side of the chart versus this side of the chart are two different contract prices. That contract variance can be over 100% difference depending on what you're on, you know. So, you know, you might have 300. I think on this trade I got like 190 or 200, something like that on this move. And then that same contract on this side of the chart was like, you know, worth only like 50% of what it was after it made this little reversal. So anytime you're involved in an impulsive move, sell it. Trail your stop into that strength and sell it. Because when it runs into the cluster of orders, then you can make a decision if you want to re-enter or not. Especially when it's getting weak. Like this. And that's why you use 5 and 15. Use both. Especially when it's getting weak like that. You sell it into the strength. And then you can make a decision, right? Because like if it's getting weak, okay, it's getting weak, and maybe you're looking for an upside move. Let's just assume this wasn't there. It's getting weak and it trades down and you're like, okay, whatever, right? I'm out of the trade. If and when it decides to break beyond that high and close above, like something like that, right? If it broke beyond it, then that would show you that the sell orders are exhausted, and then you could take a trade for a continuation, right? Because that would be a break of structure to the upside. So, just going to pause on that note. Got about 15 more minutes or so, and then I'm going to have to call it a night. I don't know if you guys have any more questions. Fire away, because I got to go to the grocery store. All right. Sounds good. Have a good night. I'll see you in the morning. Yeah, if you guys have any other questions, feel free to fire away. I feel like that was a pretty good session. We definitely covered some key components here. Hopefully that you'll be able to use these tools moving into the future, moving into the week. I think I gave you some new tools to work with. Or a new perspective also. Yeah, no problem, man. Yeah. Yes, look for these candles. Yes, I cannot emphasize enough. Look for these guys. Look for hammers and dojis, especially on a 15-minute time frame. You want to look at both, but especially on a 15-minute time frame. But you got to look at both though. If you're day trading, if you're day trading. If you're going to swing trade, it's a little different. A little bit different if you're going to swing trade. I'm just going to delete all this. Yeah. Dojis, hammers, and bullish or bearish continuation. 1, 2, 1, 2. You know, that's what you're looking for. You're looking for these guys. You know, that's what you're looking for. You're looking for those guys, and you're looking for these guys. And you can see how it plays out, right? From a probability perspective. Even if you didn't know anything else about supply, demand, market structure, whatever. If you traded SPY, right? If you traded SPY on Friday and simply traded by when you see these two candles, take an entry, right? You would have caught, like, let's just look at this. You could have caught this. You could have caught that. You could have caught a piece of that. You could have caught a piece of that. Like, just on that alone, like with knowing nothing else, just waiting for those two candles to close out on a 5-minute chart, you could have just done that every time. Every time you see these two candles close, you just took an entry blindly with no other technical analysis, no other understanding. Just blindly waited for 2 5-minute candles to close consecutively with these particular types of shape, right? You would have caught 4 moves, like 4 decent, 2 really nice ones, and 2 that you would have maybe got like 30% out of or something. Okay, like that's how important they are. Okay, like they're very important. I can't emphasize this enough. Like they're extremely important. You know, so yeah, like if you would have simply just took an entry on that and trailed trailed a stop, you know, and then if you had even a little bit of understanding of like, oh, you know what, this looks like it's getting weak here, I'm gonna exit. Oh, look, maybe a bearish move. Let's see what happens. I'll take an entry. Oh, it looks for a continuation. Oh man, look, a tweezer bottom. I'm gonna exit my trade. You could have at least caught, you know, 60%, 50% of these moves just using that one tip alone. Like that one tip alone is worth millions, billions, billions of dollars. Okay. So that's what you're looking for, though, man. Yeah. Anyways, if you guys got any more questions, I got like another 10 minutes with you, and then I'm gonna have to call it a night. So you got me for 10 minutes, and I'll answer whatever you want. And other than that, I'll see you in the morning. Feel free to fire away if you like to, though. A little high-waisted short. I got you. That's cool. No problem. Chris, you got anything for me? Yeah, feel free to hop in and ask questions or whatever while you're doing your projects too, Dan. You know, join in when you can. I know not everyone can be available all the time, and you guys got a lot of different things going on in your lives, so. And most of the people I see have checked out now, so. All right, cool, man. Sounds good. Yeah. Yeah, feel free to, that's good you're taking notes. Yeah, man. Take notes of the key points and, try to absorb as much as you can. It's a slow process though, but here's the thing which is cool. Because you guys are working with me, and this is something I didn't have for a long time. I wish I did. I wish I had. I wish I had myself 10 years ago. It's. I know that I'm making it sound easy, and that's only because I'm simplifying it for you. And your learning curve is going to be accelerated dramatically just by having someone to just teach you these simple things, let alone the more complex things that I teach as well. You're just going to learn a lot faster. Like everything not everything, but most of the stuff that I'm giving you is things I had to figure out, and just learn, because there's so much junk and trash on the internet. It's just a waste of time, So, but yeah, just having a mentor is just like, man, it can just accelerate your game. But I think that's with everything though. So, but yeah, definitely keep taking notes, and just you can make your own little trading Bible, if you will, of things that suit you personally, that are very helpful for your particular style of trading, because we're all going to have different styles. I can't teach you style. I can only give you the proper methods of trading, and the proper lens, more importantly, the proper lens to observe the market through. Your style is going to be your own. It's like anyone who plays sports, right? Like, you learn the principles of the game, but then you develop your own style of playing. Like Kobe Bryant plays different than LeBron, who plays different than Steph Curry, who plays different than Dwayne Wade. Like, they're all great players, right? But none of them are the same. Like, they all have a different style of playing, but they all know the principles of the game. You know what I mean? But their style is just different. But they're all winning, right? They're all winning styles. So, but your style is going to be dependent on you as an individual. So, but I can teach you the game, at least, and the structure and the proper lens to observe through. And that's what you need. Like, proper methods, the proper lens. So, anyways, well, guys, I think that was a pretty good session. I feel like we covered some good details here, and just like some really, basic things, simple things. I think I'm gonna sign off and call it good. And yeah, okay, good. Yeah, I'm glad it was helpful. I will upload this video. I've been recording this the whole time. I'm gonna upload it to YouTube so you guys can review it if you like. Okay. All right. Have a good night, sir. Be safe. Take it easy. Bye.